Hello everyone and welcome to part 7 of financial accounting. Today we're going to go through the statement of cash flow. And what are the statement of cash flow, may you ask? Well, the statement of cash flow's principal function is to give information regarding cash payments, and the net change in cash arising from a company's operating, investing, and financing activities over time. Yeah? So these three activities, operation, investing, and financing, is what you are going to look after when you do a statement of cash, basically. So we can start by looking at the operation activities. So operation activities include cash activities related to net income. Yeah. So for example, cash generated from sales of goods, which is revenue, and cash paid for merchandise expenses, which is all operation activities because revenues and expenses are included in net income, right? So for the investing activities, includes cash activities related to non-current assets. And non-current assets include long-term investments, property, plants, and equipment, and the principal amount of loans made to other entities. For example, cash generated from sales of land and cash paid for investments in other companies are included in this category. However, it is very important to note that interest received from loans is included in operation activities. Yeah. And financing activities include cash activities related to non-current liabilities and owner's equity, non-current liabilities and owner's equity equity items include the principal amount of long-term debt, stock sales, repurchases, and dividend payments. However, it's also important to note that interest paid on long-term debt is included in operation activities. Yeah. So let's look at the balance sheet. And what's the first thing? What is the first thing we have to do when we look at the balance sheet? It's very essential to consider this equation or this formula right here. Assets equal liabilities plus shareholder equity. The total assets here is 135,000, and the total liability shareholder equity is 135, which is equal, yeah, in 2020, and for 2019, 126 and 126 is also equal, which means that if you have done this balance sheet before you're going to this statement, your balance sheet is pretty much right calculated, right? Let me put it like that. Yeah. When you do statement of cash, it's also essential to consider stuff like increase or decrease in account receivable. So if you watched my previous video, you know what accounts receivable is. So is an increase from 2019 to 2020 a good thing that it increased or not? I mean, account receivable is a company waiting to get paid from its customers. So if it increases all the time, it might be that the collection technique from the company might be a little bit poor, but it's up to your critical thinking to think about that. Yeah, just leave it in the comment section and I will help you out with that. Yeah. So increase or decrease in inventory. Yeah, same thing here. 25,000 in 2019 and 41,000 in 2020. And is it good or bad that it's increased? Well, maybe your sales gone down and your inventory just starts increasing because you haven't talked to the manufacturing, or maybe your management like some miscommunication over there. Well, it's up to you critical thinking to decide, because when we're going to do analysis of businesses in later videos, it's essential that you have this critical thinking. Yeah. Well, it's so it's bad or good, leave your thoughts in comment sections and I'll reply to you. Yeah. Next one, increase or decrease in account payable. So in 2019 we had account payable for 46,000 and account payable in 2020 23,000. So it's a decrease, right? So is it good or bad? So in 2019 you had to pay a bank or someone you owed money 46,000 pounds, but in 2020 you only have to pay 23, which is a decrease. Is it good that you have to pay less money to people you owe, or is it bad, or is it bad? Yeah, you get the point. Use your critical thinking. And the same thing with tax payable. Yeah, it's the same thing. Just consider it, leave it a comment, I will answer. Yeah. So let's look at the question. Let's look at the income statement first. Yeah, so income statement, it's pretty much, you should know how it looks like and what you need to do in that from previous videos. But revenue is essential, important, and the most crucial one is net income, because we're doing a statement of cash flow and that's what we need. Yeah, so net income, sales revenue. And this is the question. Yeah, so prepare a statement of cash flow with the indirect method. All right, let's do that. So we have the balance sheet right here, and we have the company's income statement. I will just highlight some parts that could be important to you, you know, because these could be important like this. Yeah, I will just do like this. I'll use this information as well in the statement of cash flow. Yeah, it's all of this information and all the balance sheet, income and statement. Try it out for yourself. Try to make a statement of cash flow. Pause this video, try to do it, and come back. And I will be quiet for 1 or 2 seconds, and I will say welcome back, and you continue with the questions, etc. But try it out yourself, and let's see if you get it. Yeah. Yeah. So welcome back. So let's see if you got it. Yeah. So here is the statement of cash flows, as you can see here. Let me see, right here. Yeah. So what we have to do first and foremost, we have to consider the net income, and we're gonna place it right here at the beginning of operation activities, right? We didn't have any adjustment, so we don't have to do anything there. So in the additional information, we have the depreciation expense was 6,000, which we're going to list right here. Increase in account receivable, which we could find in the balance sheet right here. So from 2019 we had 14,000, and then increased to 23,000. So it's an increase of 9,000 in account receivable. Is it good or is it bad? Well, you tell me. We had an increase in inventory as well. So we had from 2019 we had 25,000 to 41,000 in 2020. Yeah, increase in tax payable. Wait, let me see. Oh, sorry. Yeah. So inventory 16,000. Accounts payable is down here. Yeah, so it's 46,000 to 23,000. So it's a decrease in accounts payable for 23,000. Increase in tax payable, however, it's here and here. Is it good, bad? You tell me. And then we have sales of equipment, which is right here. So equipment was sold for 10,000 cash. The original price was 13,000 and had accumulated this depreciation of 3,000 at the time of the sale. So sales of equipment right here in investing activities, right? So purchase of equipment was also here in the additional information, 8,000 cash. So the net cash received investing would be 2,000. It should be pounds here. I don't know why it's not. This is pounds. And the net cash received for operation is right here. Yeah. And then we have cash from financing activities, issue of bonds. Yeah, so bonds payable increase. Yeah, right here. Payment of cash dividend was in the additional information. The dividends of 28,000 were declared and paid right here. So net received for investing is minus 18,000, as you can see right here. So what you're going to do basically is just take all the nets from each activity. So this one, take this net, and this net, calculate, and the net decrease would be 10,000 minus 18,000, which is 8,000, right? So it's 8,000 right here, 8,000. This is a decrease of 8,000, right? Cash at the beginning, you have to write that after that. So cash at the beginning, we had 33,000, which is written right here. So 33,000, and cash at end, we had 25,000. So by just looking at the balance sheet, before we start the statement of cash flow, we can see that we have a decrease from 33 to 25, which I tried to hint it at the beginning. Hopefully you got it. But you can just take 33,000 minus 25,000, which will give you minus 8,000, which is the net cash decrease. But you have to do the statement of cash flows in order to show investors how your money operates and invest and etc. Yeah, you get the point. So please leave a comment, and as always, have a good health. Subscribe, like, comment. And I'll see you in the next video. Yeah.